Ladies and gentlemen of the crypto space, 11:59 on a Monday, September 14th. We're halfway through the month, another month. I still can't believe August is over with. What a year this has been. And it's not stopping. Nothing is stopping because this is the craziest time I've ever seen. It's like time compressed. It's like the digital era is accelerating and so much stuff is happening so fast. It's even hard to keep up. It's hard for me to keep up at times. I literally step away from the computer for a weekend. Oh my goodness. A day. Dare I take 2 days? It's almost impossible to catch up, let alone keep up. Who's in the house? We got Lewis. Always a pleasure. Thoughts on Polkadot? Yes. Yes. Now we're talking. Paul S. in the house. Nas Boyer. Always a pleasure. J-Dog. Digified. It's my baby. Paul S. No man's just starting. Yes. I think it's a lot. So it's a lot's just starting. A lot has been started. And, what I've said on a couple of shows last week is that we have a bit of a foreshadow going on, and that's how you're going to position yourself to change the rest of your life right about now. Now, has happened a couple of times over the last 100 years. Predominantly, the crises, 2008. There was little mid-level crises over the last decade, but the notable one was 2008. So if you can position yourself out in front of what's going to play out over the next couple of years, oh, you're going to be ahead of the curve. And I think the biggest macro observation that could be seen that's quite obvious is going to be inflation. But here's the kicker, and this is the interesting one. And then let's get into the topic of today. Fair POW, proof of work launch versus ICO, initial crap offer. Oh, initial coin offering. Yeah, crap. I probably should have went with that. Versus Lockdrops and Gov assets. A couple of folks had some nice commentary last week about stuff they want me to talk on. So, lo and behold, here we go. Who else is in the house? All the best from Norwood, Cal. Always a pleasure. Yeah. Yeah, this year, forget it. That's right, Paul. Let's pop it over to the main screen. So, Wealth Theory posted a nice tweet. Gold up, silver up, stock up, real estate up, Bitcoin up, groceries up. You go to the Chapwood Index, everything is up. So this is what inflation is. It's the devaluation of the dollar, and we'll start to see it costing more dollars to buy the same quantity of gold. Costs more dollars to buy the same quantity of silver. And this is what, I said this towards the beginning of this crisis a couple months back, and people were like, it's going to cost the same amount of money to buy the same quantity of stock. And that's inflation. The devaluing of the dollar versus, it doesn't matter what asset, whether it's groceries or real estate or Bitcoin, it now costs more dollars to buy the same quantity of shit. Sure as hell costs more dollars to buy the same quantity of Tesla. I can't believe it ripped through the 200 EMA on the 1 hour. I was looking for this to bounce right back down. All right. So I still got my targets up because these are right on the 200 EMAs of the 4 hour, the daily, and the weekly. We'll see what happens. I'd love to have a position in the company. The company is mutually exclusive from the stock price, but I will not buy it at this price. I had it much cheaper, but there was no rationality that said to hold it through this. There was absolutely no logic and reason, no fundamentals that could ever justify this price valuation. So, the only way for me, a person like me, to invest is to use my rationality, my rational judgment, and my capacity to understand fundamentals. You have to have rules. You have to have a strategy. And as long as you stick with your strategy, you have a process. If you start to deviate, if you start to delve or dabble with other people's strategies and other people's processes, you're going to step quickly out of your comfort zone. And when you step out of your comfort zone, you're not going to know what to do under certain circumstances. You're not going to be prepared. So That's why the best investors say pick your strategy and stick to it. If you see, oh, someone says this is a crazy deal, you got to get in now. Unless you understand every aspect of the asset, you're going to be unprepared. You know, you getting in on this BSC Binance Smart Chain? No, no, no. You gotta let the crap coiners. You let Messiah handle that. Crypto Messiah, love the dude, smart boy, but that's his territory. He deals with the memes. He deals with the shitcoin talk. He's a pro at it. He's been around for years doing this, and that's his comfort zone. I find it quite entertaining, but I cannot step into that territory. Um, it's just not my comfort zone. And Lil Moon Lambo and a bunch of other folks. You know who I'm talking about on Twitter. You know those boys that are shilling projects. Whatever's happening on Binance Smart Chain. No, unless you are comfortable with that process, don't dabble with it. You're taking risk. Now, let's not do risk. The whole point of my show is to minimize the crap out of risk. We want to understand what's going on, why it's going on, and we want to position ourselves in front of it. Just like wealth theory says, inflation is upon us. So listen, Bitcoin was up used this morning. What do we got? We're up hundreds of dollars. That's nice to see. So if you somehow stacked up 10 Bitcoin going up $500, now you're talking. That's a 5-chip. That's a good deal. Now, risk adjusted, that's a serious return. Because with Bitcoin, you've minimized the crap out of your risk in the crypto space. That is your risk off position. How about that? Bitcoin is risk off. Relative to where you're looking at it from, clearly relative to many other types of asset investors are going to be like, Bitcoin is risky, but relative to the altcoin assets that we've talked about and we're exposed to on a daily basis, Bitcoin is relatively risk off. The IRS is in the house. Yes. What's up, brother? Welcome. When Jared back? I don't know. I don't know. All right. So the title for today's stream was, let's pull it up. Proof of work versus ICO versus Lockdrop. So I want to hit on this real quick, and then we'll talk about gov assets, because someone asked me on Friday about Lend and why I like Lend, even though it's basically a governance asset. So a proof of work launch is Digibyte. Digibyte started at zero, relatively trivial pre-mine, so to speak, putting it at a fair proof of work launch presentation. That's what was offered. That when the project was launched, it was a fair launch. If you wanted Digibyte, you had to mine for it. There was no supply provided to an exchange. There was no, billion tokens held in escrow, time locked for the developers to release over time and use for funding development and all that fancy shit that these boys do nowadays with Ethereum, ERC20, and ERC20 mints. None of that fancy stuff with a POW launch, a fair launch. None of that with Digibyte. So there is great merit to launching an asset as such. Not that we should completely discount what an ICO is capable of. Now, an ICO, there was a lot of garbage in 2017. And the vast majority of that garbage, 5,891 coins on CoinGecko, is garbage. They're done. There's nothing. There's no utility. There's no meaningfulness to the projects. You probably have a couple hundred projects that are consistently on the top of the charts and the top gainers. You could probably, look, I'm going to sort by 24 hours. It's probably the same shit over and over again. Everyone knows Nexus. Everyone knows Ampleforth. We've heard DFI up there all of the last couple of weeks. Surprised to see a couple of new names, but Loopring, no doubt. Yearn, Sushi, we've seen. BNB, Binance. Centralized attack on decentralized whatever. Polkadot, that a beauty. Keep it going. So it's the same names over and over again. And there's a reason for this. The vast majority of assets either have obvious utility and they have traction or they don't. So when these companies launched these ICOs in 2017, they basically ran out of fuel and they evaporated into nothingness. So when you're evaluating an asset, you should be looking definitely at, or particularly an ICO asset, a proof of work fair distribution. That's something that you could accumulate. That's very much a reasonable piece of information to assess the quality of a project. Now, you could do the same thing, though, with an ICO. You got to remember, though, the asset has to have utility, has to have purpose, has to have meaning. Otherwise, it falls into a category of where's it going and why is it doing what it's doing. How Bada says, how DGB do you think Binance is accumulating? They probably just have enough to maintain proper liquidity on their DGB trading pairs. The whole point of a centralized exchange is that they're their own market maker, so they're doing in their own buying and selling. I don't know, my man. That's what he meant by Jared. You meant Jared. Getting Jared back on the stream. I look forward to having him back. I assure you, I will ask to talk with him again. I love talking with him. And the interesting thing is, I know Jared. Everyone wants to talk with him about Digibyte, and I see Jared for Jared. I don't only want to talk to him about Digibyte. Clearly, I'm interested in what kind of free time he has and what kind of motivation he has and what kind of resources maybe he has a capacity to wrangle to do work on Digibyte. But, I'm interested in him for him, what he's gone through, what he's done, what he's interested in, what he wants to do and why he wants to do it. We're all people. And, yeah, there's a lot of people out there that glorify people, but I like to see people for who they are. And I think Jared's a great person, and he's made some wonderful decisions, wonderful choices. He's done things that many people just think about, and he was able to do them. And that's quite fascinating, incredible, just to when you actually get things done and produce and have impact on other people and projects, and that's fascinating. So you cannot that is invaluable. Those are invaluable conversations to be had to hear those stories, and I look forward to asking him to tell us more stories about what he's been through. So that's the deal, Bada. That's when I get Jared back, which we will inevitably. So we were talking about ICOs, and there's no reason to completely discount an ICO as being something that's reasonable. The vast majority in 2017 were horrible. So an ICO is comparable to an IPO. You're creating shares, initial IPO, they create the shares out of thin air, and then that creates value out of thin air. So it's the same thing with an ICO. And then they sell it to raise funds. There's a lot of ICOs that have been they're for very, very big companies. Bancor was an ICO, Ren was an ICO, and these are great projects, wonderful projects. And this is really comes down to how do you evaluate a project. So you can't just evaluate a project based on its market cap, based on its trading size. You got to really dig in and see what you're working with. You got to check out the GitHub repos. You got to check out the people on the team. You got to check out as much information as you can to achieve confluence, to find confluence that suggests the project actually has merit and utility and value. And there's actually vested interest with with the creators of the project. So this is where, there's vesting. Maybe the founders have 2 years, 3 years where their assets are locked based on smart contract rules. Like Sushi, this boy dumped the crap out of it. He would have created much more trust in his work and efforts if he set like a 2-year vesting schedule for his Sushi assets, and that would give him incentive to contribute and participate and keep maintaining the platform for all those years while his assets were given time to either appreciate or depreciate depending on how much effort he put in, so to speak. Vested interest. So these are ways to look at a project to establish confluence, justification that is a good reason to have a position in a particular asset. Look, Gavin Wood did Polkadot. Yeah, I think so. Some projects it's just all you need is one name to establish a good reason to have a position in a project. Lewis says, "What POW project should we all take a look at?" Well, no doubt, Digibyte. Proof of work. Proof of work is mining. So, frankly, I mean, the only two proof of work assets I think I own. Well, Syscoin is merge mined with Bitcoin. So Syscoin. So Digibyte, Syscoin, Bitcoin, Zcoin is a hybrid. You mine Zcoin, but it also has master nodes. I don't think Zcoin is not proof of stake, so it has mining and master nodes. Um, is that it? Let me look at my portfolio. Come on, I gotta have something else. Something else that's proof of stake? No. Proof of work. Well, Ethereum's currently proof of work for still more time. But everything else is proof of stake. How do you like them apples? All right. I think Syscoin, I don't talk about Syscoin enough. I've been meaning to talk about them more. So that merge mining with Bitcoin is quite meaningful from a consensus. So there's proof of, there's masternodes. And I'm pretty sure Syscoin has a proof of stake component. Or maybe it doesn't. I not as, I don't remember as much as I probably could about the nuances to each project. But so I don't remember if Syscoin is proof of stake, but I know there's a masternode layer because I have a Syscoin masternode for a long time now. And I know that it's merged mine with Bitcoin. So from a consensus perspective, that is an interesting approach. And compared to many projects, that gives great reason to think they made good choices because it wasn't just was there an initial offering a distribution or an equity raise, so to speak? I don't recall. I don't like talking about things unless I have the information, so that's where I try and not head the conversation. So I know the simple answer to your question, Lewis, is Digibyte, Syscoin, and Bitcoin and Ethereum, and the only assets I currently hold that and Zcoin that have any proof of work aspects to them. Yes. So there was one other type of asset, or at least approach that a project has taken that I've seen lately. I think it's new. The only one that I've ever seen do anything like this is a Lockdrop, which is Plasm, which is a Polkadot substrate asset. Absolutely fascinating. So what they did with this Lockdrop, it's an Ethereum smart contract that takes Ethereum and locks it for a period of time. You get it back in the end, but you also get your Plasm assets in compensation for your locked Ethereum for the period of time. So it's getting people to have a vested interest in the PLM asset and the Plasm network by locking. So they actually have to have a great deal of faith in the project. So they're locking their assets for a period of time. But they get them back. So there's no equity raise involved with what Plasm did. So I definitely see there being much more merit to a project if there's no equity raise involved, which is why like Rio Chain, I believe, was an equity. There's a lot of equity raises lately that are totally turning me off. Like what Keynesians that a couple of Polka and what is that OM so many assets I can't remember. So these boys they seem to have a fair amount of traction, but it's an ERC 20 Mantra DAO. But it's a damn ERC-20. So what does that mean? So these assets were created out of thin air. So apparently they're staking, which is just inflation. So I don't know. It's so far departed from anything that I could process from like a monetary property standpoint that it creates uncertainty in my mind. So what is this? 5 partnerships and validator announcements coming? A lot of everything I read is fancy words because what is a validator? So you got nominators and validators with regard to a Polkadot, but MantraDAO has nothing to do with a substrate blockchain eyeing a parachain slot. So how does an ERC-20 add? So I don't fully understand, and that's what throws me off about it and a lot of other assets lately. I think I find that their marketing and a lot of the people that are involved with the project and trying to shill the project, they're not they're talking about hot words and marketability and stuff that's catchy, and rather than talking about what the project is actually doing, how they're doing it, and technicals, which maybe is attracting the larger quantity of persons, the small retail investors, but they're not going to attract people that are going to throw around like 20, 30, 40, 50 grand, 100 grand. Like the real investor, I wouldn't touch this until I know more. Seems like a bunch of big words to me right now, but there's so much of it I, that I'm tempted to spend more time and effort looking into it. I got too much stuff going on right now, and there's too many assets anyway. Spread too thin. Do not spread too thin, ladies and gentlemen. All right, so that was proof of work, ICOs, and Lockdrop with Plasm, which I'm excited for Plasm. That Lockdrop concept gives a great sense of security. They didn't raise money. There's no equity raise involved in Plasm's token distribution. That's quite fascinating. Quite fascinating. Let's pop it over to the main screen. Let's talk about Lend real quick. It's a governance asset. So generally speaking, Comp, BOW, Curve, and Lend, I don't like buying them. I wouldn't buy Comp. I'm not interested in participating in the governance of the Compound protocol, nor really Curve or BOW or anything. But Lend strikes me a little differently. So they hit a different note in something that appeals to me, probably because, which is quite interesting because Compound pretty much does the same thing as Lend, except Lend was launched a year earlier and they were the first. So that carries a lot of weight in my gut instinct with regard to how I view their project. Lend has the money license, the banking license, a fiat on-ramp license in England, London, in all that territory. Is it? I don't know if it's just. I don't think it's just England. I think it's all the territories. Let's take a look real quick. Um, Here, they probably have a lot of posts lately, but yeah, no, UK, all of the UK. That's a big deal because that's not just England. Fascinating. Okay, I was just reading that real quick. Yeah, so Aave strikes me as something that's quite different than just a governance asset. Like Curve is very much intermingled and connected and intertwined with the DeFi excitement or exuberance that's going on. And that throws me off because I don't have much faith that whole excitement is going to last. And right now there's a large effort by Binance to capture a lot of that excitement. And there's a lot of this predatory action with what Sushi did to rip TVL away from Uniswap, and they were very successful. So when you have billions of dollars on the line, there's a lot of contention, a lot of frankly, malicious activity in many regards. So I want to avoid that, and I don't get that same feeling with Lend, and Lend is going to be converted to Aave. Where's that post? Should be a post. So there's a vote that was put up recently. Here you go. The signaling polling is up for the Lend to Aave migration. So this catches my eye. I think they stand apart. And Lend is something that I would be interested in participating in governance. Now, I don't have the same position I had historically, so I've thrown around some growth money at Lend at times, and it's up so many thousands of percent since the beginning of the year, and that growth has occurred. But nowadays, I'm much more risk off. So myself, I have a reasonable position, but it's only 2-3%, maybe to 1.5% of the whole portfolio, and the vast majority of the portfolio right now is Bitcoin. I'm completely crypto talk. I am risk off right now. Listen, Bitcoin rips. I'm in a position where if Bitcoin rips, I'm going to the sizzler. I'm just saying. I had my fun between March and now. I've accumulated about 400% gains. Is that about 600? But that just shows you why it's so important to you got to take the cream off on the way up and on the way down, because that's how much was lost with that pullback that we had about a week and a half ago, almost 200%. But I was able to protect. I didn't. My whole satisfaction with this entire process this time around, as compared to 2017, I did so much better than I did in 2017. 2017, I gave almost everything back. Not this time around. This time around, you take on the way up and you take on the way down. So Aave's a good deal. I have a decent position in it. I like Aave. I think that they could easily be worth billions in the future. Um, dare I say they head down the road of a company where they're able to literally just offer the products and services of a company, but maybe not as a company. Like, why they want to offer mortgages and real large types of loans under hopefully decentralized, uh, using decentralized tools and more fair types of conditions and rules. Maybe so they probably get a small part of it, but the lenders aren't major players. They aren't banks. They're these pools of liquidity, uh, which is what they've proven is a functional implementation that they have over the past year. They've proven that their protocol works, which is incredible because historically banks lent other people's money to people to get it for a mortgage type of loan. But now people can pool their money. I could contribute money to Aave and get returns on my money, and in theory, at some point, those returns are from mortgage interest payments. That'd be crazy. And that's all what they're doing. That is what they're doing. It's quite fascinating what is emerging. What we're seeing is the 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 blending of the traditional financial world, products and services that we're used to, and these types of products, these DeFi products that we've seen emerge over the last couple months. And this is a perfect example of it. Where is it? UK does not just issue the company projects. I'm sure they have a company at some layer of their project structure. You don't just get licenses like this. And this is very meaningful. I wouldn't discount this. And I look forward to what Brian Brooks comes up with at some point with the United States Comptroller of the Currency, Office of the Comptroller of the Currency, with a national fintech charter. And that's perfect. Can you imagine if Aave comes through with one of the first national fintech charters and they have UK, the US locked? That'd be crazy. Oh, my goodness. All right, ladies and gentlemen. Edgeware did the lock drop first. My man. Thank you very much. Now, I wish I would participate in that. I was late. So, Edgeware and Plasm are on a similar page. That's really cool. Thank you. That's definitely good to know. So, keep your eyes out for lock drops, though. So, I think that is a fair approach to initial token distribution. Dude, you make an excellent point. Thank you very much for pointing that out. Um, Genuinely different. Love Aave. Yes. Do you think that will be worth running an F2 node? Here's what I know. From a speculative standpoint, Ethereum is no doubt to appreciate over time. So there's no doubt reason to speculate. Uh, you probably want to see, you probably want to have 32 Ethereum if possible to likely, potentially, probably operate a node to see what it's all about. What happens if it is lucrative? I don't know. I'm just telling you, I sure as hell want to find out. So a lot of what we do is still speculation. There's no guarantees, but that is something sure as hell I want to speculate in. All right. 12:30 on a Monday afternoon, everyone. September 14th. It is a pleasure. I had a nice, relaxing weekend, but I am back in action for a brand new week of hot topics. And I got some really good stuff lined up. I think I have an interview. I have one interview lined up. I'm going to be talking with Blocknet. And I have some other stuff lined up later this week as well. So I'll keep you all posted as my schedule solidifies. And we're going to have some good stuff this week. Thank you, everyone, for joining. It is always a pleasure. Y'all have a wonderful afternoon, and I will talk to you tomorrow. Peace.